Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hi investors, this is Anjz from First Metro Securities. Welcome back to Market Bites. Today, we'll go through some highlights from our latest company update on PLDT Inc. or TEL. We are downgrading TEL to a hold with a target price cut to 1,350 pesos. The main reason? We're factoring in a valuation derating as the Konektadong Pinoy Act or KPA is expected to weigh on the company. Let's break it down. For fixed line, the outlook is more neutral to positive. We acknowledge that TEL remains the country's leading fixed line segment player, a sector characterized by a more resilient demand outlook. Beyond service revenues, KPA's open access provisions will enable TEL to leverage infrastructure wholesaling, given its fiber network is currently only 57% utilized. Conversely, an opportunity exists for improved capital allocation if TEL can scale back or defer network expansion plans, opting instead to lease infrastructure of other network operators. But for mobile, the picture is more challenging. Lowering entry barriers will significantly disrupt the already saturated mobile segment. This increases the likelihood of faster than expected market share losses for TEL, coupled with renewed pressure to compete on service quality, pricing, and innovation. For now, we think it's best to stay cautious while monitoring how the regulatory landscape plays out. Now, let's go over some key takeaways from the 1H25 earnings. First, the drag from legacy services is easing as customers shift to newer technologies. Non-legacy services now represent 90% of total revenues at 87.1 billion pesos, or up by 3% year-on-year. Second, the broadband business stayed resilient. This segment saw a 4% year-on-year increase, primarily due to 7% year-on-year growth in fiber amid accelerated rollouts. That's 169,000 net additions versus 51,000 in 1H24, offsetting weakness in mobile, which was down by negative 1% year-on-year, and enterprise, which slipped by 1% year-on-year. Third, 5G adoption is picking up. Data traffic surged 84% year-on-year, and unique 5G devices rose 50 or 46% quarter-on-quarter. Fourth, data centers continue to shine. Revenues increased 36% year-on-year, propelled by Vitro Santa Rosa coming online with a live hyperscale anchor tenant. And finally, Maya is showing solid momentum. Its contributions more than doubled quarter-on-quarter, increasing TEL's share in equity income to 406 million pesos in 1H25, demonstrating sustained profitability since the first quarter. Here are a few critical data points we're closely watching. CapEx was lower by 22% year-on-year at 27.4 billion pesos. Guidance was trimmed to 63 billion pesos from between 68 to 73 billion pesos. As TEL secured favorable prices and payment terms, with management targeting positive free cash flow by 2026. Data monetization remains weak, with revenues per gigabyte down by 7% quarter-on-quarter and 2% year-on-year. Mobile ARPU slipped 4% year-on-year, driven by lower ARPUs across both postpaid and prepaid. Broadband ARPU fell 2% year-on-year as prepaid fibers continue to expand. So, what could make us more bullish? If the Konektadong Pinoy Act has less impact than expected, greater clarity on other regulatory issues like online gambling, sustained momentum in fiber, especially with prepaid rollouts, and improved data monetization that drives mobile revenue recovery. Meanwhile, key risks to our call include Konektadong Pinoy Act having been passed without major revisions, leading to heightened competition at the expense of incumbents. The impact of online gambling regulation on Maya's earnings being larger than expected. and higher than expected mobile market share losses, leading to further weakness in mobile revenues. So, to wrap it all up, that's a hold call for TEL at 1,350 pesos target price. And that's it for today's podcast. Make sure to follow us on our socials. That's Facebook, Instagram, on YouTube would be First Metro Securities, and on TikTok, we're FirstMetroSec. Yeah, thanks for tuning in. Hope this has been helpful.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
First MetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and First MetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of First MetroSec. First MetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.